Deepanshu Mohan. He is Associate Professor of Economics and Director, Center for New Economic Studies, Jindal School of Liberal Arts and Humanities in the OP Jindal Global University. The government in Parliament brushed aside all these privacy concerns, but the question is, can the U-turn only be attributed to the resistance this faced from civil society groups and privacy experts, or was it Apple and Google saying that they will not be conforming with this and they would speak to New Delhi about this? So, was it good business sense to just withdraw?
Yeah, absolutely right. I mean, one of the big issues with beyond the political crisis is a crisis of stakeholder participation when policies and directives are issued. This is a sort of a Delhi technocratic consensus which issues orders, does not consult business stakeholders. There is on one side a projection of an image between the government and the business community that we are open to the possibility of greater investment across sectors. I mean, telecommunications has been part of the big part of the Make in India project. But what you're facing right now is a crisis not just of credibility, I would probably say, but also a crisis of a lack of understanding of the core issues within not just say cybercrime complexity, which is a very complex ecosystem. I mean, on Sanchar Sathi itself, much of the experts who were cybersecurity experts said the most of what the app will be able to do is detect fake handsets. But if you really look at the major problem, a lot of the problem in cybercrime is less related to the handsets, but more on the user interface and the platforms. How the user is intending to commit a crime, which can hardly be diagnosed by a pre installed app. Now, which means there is a very little consultation even on the issue that you're trying to diagnose. Now, if you leave aside these issues also, the way these directives get, I mean, so we give a lot of credit to this government about how good it is in communication, narration, projection, rhetorical projections of news and items. I probably would say that it is one of the worst communicators of policy directives. We know this from a good 12 years of a credibility crisis in even the policy making arena. I mean, we can't forget, of course, you go back to pre demonetization period, post demonetization. There has been the intent of what you want to do versus what are the steps you are taking and what you actually end up doing. There is no synergy, no cohesion, and that questions the integrity and sincerity of the government. So it's not just opposition. I mean, those who would be outside the political spectrum, Apple, for example, has clearly said no. Now, you are on one hand trying to encourage Apple, Samsung, Google, all of these companies to put foreign direct investment in India at a time when they're looking for alternatives beyond China. And then you have what you would see an authoritarian diktat. So it doesn't separate you from the Chinese establishment in that sense, of not having consultations and then giving you a clear projection of a policy directive which is not consistent with your own laws.
So this is also one of the points that the people are raising, is that the governance is of course a question, but also the government's response has been in a sense to pass the buck to Indigo. But the fact is that the FDTL norms, which increase the rest time for pilots after the DGCA's evaluation, has resulted in, for instance, Air India reducing its number of flights, but Indigo has continued to increase its number of flights, especially in this peak winter season when there's a lot of winter travel. Now, Indigo, however, has not done so. There is a pilot and crew shortage. Government is being accused of allowing this duopoly to kind of have its say over the entire aviation sector. So is Indigo at fault, or is the government equally to blame?
So I'd probably see this position or a larger situation as a function of two things. And there are a few things which are pointing to the culmination of a direction that a few of us had written a few years ago, that the government's larger focus on sectoral growth has been very pro-business in nature and less pro-market. And there's a distinction between what is pro-business and what's pro-market. Market related interventions look at the participation of all actors, a freer entry and exit of firms, and does not favor in any way to any critical one or two firms despite their market share in the sector. This is very important. I can give you not, I mean, we talk about India, but one other country which is struggling a lot in aviation, which is part of the industrialized developed world, is Canada, for example. An entire aviation sector is dominated by Air Canada. And this was years ago that a lot of investment from Emirates was coming into Canada to give competition to Air Canada, but there was such heavy lobby against Emirates that Air Canada did not let this sector come in. Now, why am I giving an example of another country? Because the government at different interfaces has a choice to make. Does it want to favor and encourage some dominant anchors, or does it want to look at the larger story? Now, the aviation story of the 1990s in India and early 2000s has been a pro-market story. You had many firms that came in. You had Kingfisher, you had American Airlines, so many, Go Air now, that came in and they went off because profitability, working capital requirements are a big issue in management of aviation sector. There are huge fuel costs. There's a lot of private sector subsidies, and the government doesn't support. In this scenario, what you see in the last 5 years to 6 years is that Indigo has been given undue access in enhancing capacity. And this is consistent with the growth of airport constructions. You can actually see that any new terminals that are coming or any new airports are coming, Indigo has been given discretionally a lot of capacity. So when you're giving a lot of capacity, you have a profit motive to expand despite you not having the enough resources. So the human capital shortage or the personal management issue is consistent now as a function of what Air India faced. Air India had a dominant position because of a pro-government ideology. And as a result, Air India always had human resource problems. Now you have an Indigo situation. So I think what is the lesson that needs to be largely learned is that whether it's aviation or a very good performing sector, which otherwise may be doing very well, the moment you pivot towards a pro-business ideology in policy making arena, you will engage in some degrees of crisis, if not immediately, eventually. The final sort of issue I think on this front would be Indigo would lose a lot of capacity over time. It would allow then again a new space, and the government would have an opportunity to encourage a new player. Given the track record of the current government, what it does is it safeguards the interests of dominant anchors. And we know this through energy sector, the Adani sort of Ambani, duopoly of sorts. And in most cases, it protects those who are dominant anchors. And then it gives the dominant anchor a good excuse to continue the crisis for a prolonged period. So I may not see this crisis in Indigo as a temporal situation. You might see more of such cancellations and delays becoming more common over time. And that may be consistent, not just maybe with Indigo, but other airlines wherever you would have a dominant position.
But I was.
The problem is that the government does not understand that creating monopolies is not pro-business. That is the main problem.
So that is really the essence of it, that there was a meeting between Indigo representatives and the government, and Indigo has been pushing against these FDTL norms which allow pilots longer time to rest. So they have not hired new pilots to kind of fill that gap. But Indigo is, because this crisis is now unraveling, government may be in a position to kind of control the crisis at the time being, given to Indigo's demands. Would that be a solution going forward?
So I read the situation as one where the government would not have much of an option but to concede to what Indigo needs because the crisis is such. And that's what I was saying, that because you have now dual actors who are dominant, Indigo has also been given a lot of access in external flight coverage now. So that's one of the big issues where it will squeeze its domestic operations to maximize on international operations. We must wait and see. I mean, how does this play out? But any dominant market actor across sectors has seen in this government a greater cushioning of interests whenever there is pushback. And when there is a crisis, they tend to take the pro-business view than the view of what the market dictates. There are other crises as well. Air India itself still struggles significantly, but as you would probably know, it gave walk-in interviews to pilots. And it's a competitive sector, so anywhere you will find pilots or human resource personnel to find better pay or better incentives, they would go for that. So let's see. But probably I would say that this will continue, you would have a more troublesome aviation sector. And it's world over. US is facing a very similar crisis in its aviation industry. We are facing a similar problem now with overbooking of flights because of profit maximization motives. And you have then the other issue of price ceiling effects not being implemented. The government clearly illustrates that you don't allow flights to charge over a particular amount. But I have not seen that being implemented across the board, across many routes, except if you remove Delhi-based routes. Most of the non-Delhi routes are still having a very high price structure. And that makes the ability of airlines to have a lot more discretionary autonomy.
Right. So even as all this is happening, the rupee has hit an all-time low of rupees 90 against the dollar, and the International Monetary Fund, which is the IMF, has given India's national account statistics, which includes data such as GDP and GVA, its second lowest rating, which is the C grade. The low grade means that the available data has some shortcomings that somewhat hamper surveillance. The IMF has said in its annual review of India's economic framework. Before I come to you, Sanjay, I want to ask Deepanshu, what does this falling rupee really mean?
Okay, so good question. I mean, a falling rupee tells two parts of the story. One is that you always look at a currency with respect to another currency. So a stronger currency always. So if the demand for dollar goes up, the value of rupee would naturally come down. That's the sort of more clear-cut explanation. Now, why the value of dollar is going up? It's going up because in the Indian scenario, we're facing right now a very troubled relationship with the US. The dollar is also a reserve currency. So we need to keep a lot of dollar reserves. India, when it faced its classic 91 financial crisis, it was a classic forex crisis, which is a crisis where we didn't have enough reserves to pay for our imports. So the lesson learned then, and the Manmohan Singh sort of reforms that came, the LPG reforms that we know of, was to revamp the Indian rupee management. And if you see the last 3 decades to 4 decades, the entire management of the rupee was done to manage the capital account, which is to get or make India a more favorable destination for investment. The value of the rupee was not kept to align manufacturing interest, that is to export more of Indian products abroad. This is very vital because if you look at South Asia or most of the Asian currencies, they have been managed to give industrial sector a more leeway, which is that you can export more freely. So we are right now seeing a position where demand for dollar has gone up. There's a lot of imbalance. A lot of that is a function of the political economy of relations between India and US. It is also a function of how the dollar is behaving on its own. It's been strengthening, it's been very volatile, and India has no option but to give, and that's what the RBI has been doing. It's not a recent thing. We are seeing this effect in the last 3 years to 4 years. In fact, if you see the jump between 80 to 90, the valuation of rupee, this has happened, I think, in less than 3 years. The jump between 70 to 80 happened in 4 years. 60 to 70 in valuation happened in 5 years. So this is the fastest decline in valuation. I don't think the central bank can do anything more, which is what it has taken a position now. If you would see the recent report by Reuters where the central bank source has spoken, they have conceded that the RBI will not do more. There's a reason. $10 billion have been spent in currency swaps, and you have now over only $695 billion in reserves left for the RBI to manage. So any intervention by the RBI to pump more dollars so that its demand stabilizes will only affect the reserves negatively. Now, why is the RBI concerned? This is very important because our foreign direct investment into India has been slowing down. We're not receiving enough foreign investment, which means somewhere the Indian growth story is not selling very well. There is something else which is very interestingly happening, and a few of us again on this I've been writing about, that the FIIs, which is institutional investment, which we call as hot money, has been pumping out of India. So there's less money coming in but more going out. What does this mean? So in this year alone, $17 billion of FIIs have gone out of India. Now, this is not a good trend because what it says is that those who were investing in Indian equity market or Indian stock market are losing faith in Indian companies and macro fundamentals. Now, this is quite bizarre because you would say that, well, growth story is very robust. It's 8.2%. A lot of things are looking good. But behind the numbers, the business and firm situation is not showing a very good, positive, robust growth. And that's very clear from the foreign investor market. So the two reasons for the rupee sort of collapsing, one, which I said, is the mismatch between the dollar demand. The rupee management has been kept to the capital account management. It is pivoting now towards what is called as current account management. To just simplify this, what it means is Indian government wants Indian exporters to export more, but the government does not realize that exporters export what they are importing more from, which is that what we are manufacturing right now, we're using a lot of the parts in manufacturing from imports. And as a result, like an air conditioner or anything that you buy or you sell, a lot of that parts are coming in from other countries. So our imports are higher than exports. So current account deficit has widened despite all the subsidies the government has given at the cost of revenue expenditure, which is on welfare programs. So all of these schemes have not helped. You have a situation now, the rupee is collapsing, the RBI would not intervene. I would not be surprised that this touches 100. I mean, I've been having a discussion the next 2 years or 2.5 years. You might see the rupee collapsing even further because the ammunition and what we call as traditional monetary policy toolkit is very limited. There was only one institution that can insulate us against any shocks, that's the RBI. And the RBI has now taken a call on this because it has been managing a tightrope act amongst all this volatility. Now, what could make things worse? This is very important for viewers, which is if the oil price contestation, which has been the bulk of the India, US, Russia story, if oil prices go up, which is the bulk of India's import basket, we have been very fortunate in the last, I think I would say 5 to 6 years, from pandemic and post-pandemic, to not be paying more for oil. We've been paying a much, much more competitive and lower price. And in the past, rupees value have always come down when the fuel cost imports have gone up. So just by chance, if your fuel cost import goes up, India stops importing from Russia and does so as a result of what it needs to do on the US trade fund, you will have a position that this may worsen India's macro fundamental outlook. So that's a sort of a snippet of what
Finance Minister has told Parliament that this is due to the 2011 to 12 GDP base year and it is not due to the quality of data issues. And she said that a new base year will be adopted from February 27th, 2026. And she said that the IMF has not questioned India's growth figures. So you want to come in on what this means and
yeah, I mean,
how true this is?
the two parts to this. One, the fact that you choosing an old base year is not something which you want to be pointed out by the International Monetary Fund. This is well known. There is a statistical revision of base year that happens perhaps every 2 to 3 years. Professor Pranav Sen has sort of spoken about how the current metrics of choosing the methodology of growth accounting is predated and is almost in many senses medieval in its structure. And this is problematic because what it does is it will either undermeasure your performance or overmeasure it by considerable margin. And I must say that a lot of the growth right now which is happening is not happening in the formal organized space. A point that Professor Arun Kumar often makes, that it's happening a lot in the informal sector. And that's where a lot of the employment generation is also happening.
That is what the IMF has also said.
Yes, and the informality rise is a function of a classic inability of the government to create organized, well-paid, secure jobs. So when the finance minister acts defensively in saying, well, this is not about the data, but just about a base year or a statistical system, it is about qualitative measures, first of all. I mean, I think she's absolutely wrong on that. Second, this should have been corrected way back in perhaps the beginning of this government's term. It was not done because a lot of the growth performance was being politicized, not just internally, but also internationally. Foreign investors look at macro fundamentals. Now, I'll give you examples where countries are seeing more investment coming in. You look at Singapore, look at the UAE, look at Indonesia, a country which competes a lot with India on international stages. You look at, for example, Vietnam. Each of these countries, as small as they are compact as foreign investment destinations where people want to invest. We want to travel to these countries to understand these countries better. The reason why is because they've ensured an ecosystem of trust, transparency, and accountability between the state, business, and citizenry. And I think the fundamental entire sort of discussion is about trust and trust deficit. If you don't believe the data that you're showing and the foreign investor is not happy in seeing what it is seeing, you will not see just only a collapse of the rupee, but your fundamentals would be questioned, and you will, much like South Asian countries, if you look at Bangladesh, you look at Sri Lanka, you look at Nepal, Pakistan, of course, all of these countries have seen a collapse in their economic macroeconomic fundamentals despite warnings from the IMF. My big concern is not just only on investment, but it's also on debt. I think a fact that we're not emphasizing enough, which is decreasing government's fiscal capacity. So we would not have a position for the government to even ensure regular expenditure if it does not start taking immediate measures right now. But all of those measures start from a acceptance of truth. The acceptance of truth is that we are in a spot of bother, we are troubled, and it's not as if that everything is grim. There are a lot of good things happening in terms of certain sectors. Fintech is doing very well. You have a lot of organized capital generation happening across sectors. Residential housing is doing well, affordable housing is doing well. So you invest in those capacities. Services is doing very well. So you can pivot, you can have an industrial policy imagination, but there's a delusion of sorts. And I think the advisory machinery to the government on economics has been extremely vague and abstract. I think economists who are advising the government need to focus on the discipline than on the rhetoric of what is being put.